The first opening is absolutely quiet. In fact, the Sensex is already in the red.
The Nifty and the Sensex currently up close to about 0.8%.
Nifty is up 200 points as we speak.
So stability is the name of the game, and so far it's been quite stable.
Good day for the bulls, off the highs, but definitely big gains is what we saw across the board.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Meeta Batra. Here are the top stories of this evening. Markets snap their 4-day losing streak to start the week on a positive note. Nifty reclaims the 18,000 mark as all sectorial indices trade in the green except for the Nifty Pharma. The Sensex gained 721 points, the rupee ends stronger than Friday. Private equity investor Advent is set to acquire control of Suven Pharma from the selling promoters who see this as a succession move. The 6,300 crore rupee deal opens up the possibility of Suven's merger with Cohance and triggers an open offer to existing shareholders. Suven Pharma tanks over 4%. Midcap sharply outperformed large peers amid a broad-based recovery in the market. The Nifty Midcap index closes with gains of over 2.5% as market experts believe the sector can be an attractive investment over the next 5 years. Equitas Small Finance Bank gains after its CEO agrees to a 3-year extension of his term. SJVN jumps on an order win. Welspun Corp perks up on gaining control of Syntex Prefab via IBC, and restaurant brand Asia gets a fillip from the launch of Popeyes in Indonesia. Crude oil prices start on a positive note after 2 weeks of gains. Rise in oil prices attributed to Russia's plans to slash output, and US refineries shut in Texas and North Dakota due to the storm. All right, well, those are all of the top stories that we're tracking this evening. Here's a lineup of what we have in store for you. First up, we will bring you market opinion from Andrew Holland, CEO at Avendus Capital Public Markets, Alternate Strategies LLP, and in Corporate Voices, we have Venkat Jasti, CMD at Suven Pharma. Well, first to the day's trading action. The Lal Street saw a strong bounce to snap its 4-day losing streak. The Nifty and the Sensex gained over 1%, with the Nifty reclaiming that 18,000 mark. Financials and midcaps outperformed. Prashant Nair is here to give us a wrap.
Very decent bounce coming in the market today. The Nifty on Friday lost 300 points. It gained back 200 of those points by close. It would have been even better, but in the last 30-40 minutes or so, the market gave back, on the Nifty, it gave back 80 points and, proportionately on the banks as well. But after 2 days of gut-wrenching kind of sell-offs, this is a good outcome that we've had today. Some stability coming back as we enter the last week of 2022. Broader markets also, which sold off very aggressively, came back forcefully. Decent kind of gain, 60-70% of Friday's losses recouped today. And banks, PSU banks, especially the public sector bank index from the December 14th high had lost 14%. In a single day today, it gained 7%. That was big. The private bank index did well. Metals as a space was up about 2% or so. Some nifty gainers on your screen: Indocent, SBI, Hindalco, and more. In the broader markets, advance decline was extremely strong. Some 7 advances for every stock which was down. The gainers from the PSU Bank space, the private financial space, Yes Bank, Poonawalla, J&K, defense names, especially Mazgaon, Garden Reach, Cochin Shipyard, Bharat Dynamics, and so on and so forth. It's a good comeback after 2 days of ferocious selling. Let's see if we can hold this. Very little by way of global cues, mind you. US markets are shut today, later, so we come back with very thin global cues, but it's going to remain like that at least for the next fortnight or so. 18,050, which is very nearby, remains something to watch out for. The market starts to trade above that. We can aim and hope for higher levels, but that's the first one. The market needs to keep its head above. Back to you.
Okay, all right, Prashant. Thanks very much for that. Well, let's get in some expert opinion. Andrew Holland, CEO at Avendus Capital Public Markets Alternate Strategies LLP, said that he expects high volatility in the market in the month of January. He also discussed his top sectoral bets for 2023.
Market, I think, in January, still occupied and volatile in terms of, we've seen over the past month, right? We've gone from kind of the Goldilocks scenario to a recession again, and the figures are still not supportive of the Fed, reducing so quickly. So I think that's what's going to keep the markets the volatility of the markets kind of quite high, at least in January. And of course, for India, we have our budget coming up in February. So again, there might be some kind of volatility around that in terms of what the finance minister may or may not do. Global theme that's playing out, one is renewables and one is defence, and that's going to continue into 2023. So that's a space which you could just need to kind of continue to invest in. I think because of the capital expenditure capex cycle which we expect globally, it's going to be more towards those industries where there's a security supply problem in the past or potentially in the future. And therefore it's going to be the different capex cycle than we've seen before. So it's going to suit the kind of the Siemens, the ABBs, and so on. It's not going to be traditional L&Ts, BHELs, which I think will be leading the capex cycle this time around.
Okay, some opinion coming in there from our vendors, but on to the second headline this evening. Suven Pharma tanked over 4.5% in trade despite the news that private equity investor Advent is set to acquire control of the pharma company. Advent is also planning to make an open offer to acquire an additional 26% of Suven Pharma. Well, a couple of pieces of news with regards to that. Advent, in fact, entered into a share purchase agreement to acquire that 50.1%, and they will be acquiring it at around 495 rupees per share. So the total deal is worth around 6,300 crores. The mode of payment is going to be cash. Now, the promoters, the Jasti family, will continue to hold around 9.9% stake even after the deal. Now, Advent has launched an open offer to acquire an additional 26% stake, and that open offer, if it is entirely successful, then their stake will go to 76%. Reason for the stake sale: unable to bring a proper succession plan in place. Venkat Jasti's role post the deal. He is likely to stay on for a period of time. Suven Life, no plans to fund Suven Life from the promoter funds at this point in time. Advent says Cohance's first half revenue is tracking at around 1,300 crores, 28% in terms of margins. Combined margins entity would be around 30-odd%. They're not considering delisting at this point in time. So why was Suven down around close to 5% by the close of trade? One, there was no premium to the deal. The deal was done at around 495 rupees versus the closing price ahead of it. Fears of margins being diluted on a blended basis. Remember, Suven has had margins of over 40%. Cohance margins are at around 28%. So blended basis, the margins will possibly be lower. Promoters to hold 9.9% stake. There is a fear of Mr. Jasti not running the business on a longer term, and that seems to be weighing in terms of investor sentiment. The stock has already run up around 25% from its 52-week low. And questions on the lack of details with regards to a possible merger between Cohance as well as Suven Pharma is something that weighed on investors as well. The lack of clarity on any kind of merger ratio and those details was something that investors wanted to know more about. Well, on that note, let's get in some opinion that we had on the deal from Venkat Jasti of Suven Pharma as well as Advent.
Eventually, the Advent has to get the controlling stake. That's what after the 26% open offer they will launch. That's what the intent is all about. So the maximum will be diluting is around 50%. We've been telling that we are looking for a strategic partnership, but this thing is a combination of strategic partnership along with the financial partnership. The value creation has to be more, and the commitment and the things what we do in terms of the commitment to customers and the passion with which we do the things and the focus of the business will remain as same. We are not able to bring in the succession in plan. So there is so much time, maybe 5, 6, 7 years only, I can be actively doing this thing. So we need to plan properly. And also at the same time, we need to increase the value to ourselves and to the shareholders. And this is an opportunity where this is strategic financial investment has come. That is the reason why we have taken this opportunity, because with the it will be EPS accretive and it will double the revenue when the platforms merge into Suven, and Suven continue to run this way.
Okay, well, on to the third headline this evening. The Nifty Midcap Index closed with gains of over 2.5%. However, fund manager Gautam Sinha Roy of ICICI Prudential Life Insurance is not betting on midcaps in the short term, but believes midcaps can be an attractive investment in the next 5 years.
You say that midcaps are attractive today versus large caps on a very absolute basis from a near-term perspective. Probably not yet. That would need a little bit more of a correction. But if you think of it from more of a longer duration perspective, so as you look at India, India is clearly the fastest growing, one of the largest economies in the world. It's a very strong, place to be in for an equity investor. You have very large GDP and it's growing at the fastest clip in the world over the next 5 years. And which set of stocks are most levered to this growth opportunity? If you ask yourself, the obvious answer would be midcaps. And within midcaps also, you are seeing emergence of new sector after sectors.
Okay, meanwhile, Ankit Agarwal of UTI Midcap Fund says going ahead, the revival in the SME segment will be key.
From a broader financial and especially on the mid-sized financials, you're right, there was the valuations had significantly come down for a lot of the names. And, we were seeing improvement in credit quality and asset quality improvement that led to these valuations moving up. Now going ahead, it would be more about, what is the sort of revival that we're seeing on the SME side, specifically with some of these names, how the cycle on the CV side moves up. I think those will be the drivers to watch out for. I think the play from here would be clearly on how the credit growth plays out in some of these names to support the valuations